Hey everyone, hopefully you're having a good day. My name's Andy. My channel is Finding Value. Today we're going to do our daily technical analysis update of commodities. We're going to work our way through the dollar, yields, precious metals, and commodities and ETFs that I follow. I'm going to interject my financial opinions across the board. And if you guys want further help with anything, looking at individual companies, evaluating market timing of all this stuff, check out finding-value.com. We have a platinum question and answer session at 7 a.m. Sunday, Mountain Standard Time. So let's dive in. Let's see what's going on with the markets right now. We've got the DXY. It has puked lower today, down a pretty substantial amount of 0.8%. Again, what we're looking for is monetary tightness versus weakness in different currencies. And the resultant is the DXY either going up or down. Stronger monetary policy in other currencies means a weaker dollar because it's all relative. Today we puked lower. That's a tailwind behind anything that is priced in dollars in terms of commodities or anything that gets evaluated against the dollar. The two-year yield is lower today by 0.8%, but we've got lots of volatility. You can see in the two circles here, those big wicks, they are indicating that we went to go higher and then it sold off very hard. And at the same time, we came all the way back down and it was bought up very hard. So lots of volatility here. Is this a top? I don't know. There's strong buying pressure on either side of this. So it's very difficult to tell where this thing wants to go. Generally, what you see is you see a nice easing, a small increase. You get small candlesticks, the opening and closing price kind of come together. You start getting wicks at the top, but generally this kind of comes and then you slowly work your way lower and accelerates to the downside. But today we went to try to accelerate to the downside and people sold bonds to push the yield back up. So you've got buyers and sellers still here at this yield. The TNX, it's already taken off. Momentum-wise, it's down a little bit today, but still looks strong to go higher. And then the TYX, which is the 30-year yield, continuing to move on up. And we've got kind of a neutral-ish looking day today. TYX TNX ratio, this definitely looks like it's trying to put in some sort of bottom and move higher. What does that mean? It means that the 10-year could underperform the 30-year, or the yield curve could come back down to some degree. But today it was quite strong. That's going to support precious metals. We've got weaker dollar and a curve that is uninverting or normalizing. So that's going to be positive for precious metals. Bond prices still heading lower, and they've broken to the downside here on a weekly basis. This looks like a clear break to the downside. So what does that mean? We've got bonds that are selling off. That's why the prices are going lower and yields are going up. They do opposite of bond prices. So is this going to continue? By looking at the bond price chart, I think yields could continue higher. Bond prices lower. Could the curve uninvert while the curve kind of adjust, where the short end of the curve comes down some, but the long end goes up? Maybe. I don't know. I mean, I'm not an expert on yield curve uninversion, inversion in short time frames, but that's what it looks like it's trying to do. So gold was up over 13 bucks. I think it actually looks quite positive. I'd like to see another up move in gold. We've got this falling wedge that we're trying to break to the upside here. We've got support all underneath us. So to me, that looks good for gold to try to go higher. If yields cooperate, we could see that happen. That's the uninversion of the yield curve, the short end going down. Silver looks good. This is a bullish piercing pattern, which generally works its way higher. So that looks good. Gold looks good. Platinum doesn't look too bad either, up 11.9 today, 1.32%. We'll see if we can get some trampoline jumps down here at basing out, consolidating, whatever you want to call it. XAU to gold ratio, the ratio was trying to, looks like to me, hold steady here. And that could be positive for gold and silver mining companies. Zooming out, let's go to the monthlies here. The monthlies, we still need to turn this train around and get moving. So let's wait and see if we can get a little bit more stabilization, positive momentum for gold and silver mining companies and the precious metals themselves before going full bore into it. We still need to break this long-term downtrend line. If we break that, guys, I'm going to be pretty dang bullish. This may take some time, so patience, guys, patience. CRV index, again, I think we are making some good headway up today. We're still within the pattern, still a falling wedge. I would be a lot more confident if we can break up out of here, get out of there. But that's where we're at. CRB to S&P 500, very big outperformance today in this ratio, up almost 1%. Are we going to get this thing to turn? Too early to tell. We've had a massive outperformance of the SPX. Now, what am I charting here? What does this all mean? Well, this is a double top, and we've come back down. This here, that section there, that is the difference between a bull trap and a bear trap occurring simultaneously. It's the bull trap for stocks. It's the bear trap, in my opinion, for commodities. Commodities do well in an increasing interest rate environment. Stocks go down. They struggle with the headwinds. We've gotten that big move to the upside. Now, that doesn't mean that there can't be further upside, and it doesn't mean that the yields can't go lower in the short term. We very well could go lower on some of these things, push the stock market higher, and then reverse. It's all possible. In the short term, anything can happen. But on the longer term, bigger picture view, what I think is going to happen is this will go up into wave 3. We're going to have a big old move in commodities where commodities outperform the S&P 500 dramatically. That is where I think, that is where I am going to be positioned, is commodities over the S&P 500. GDX, we're still in this flag pattern. We're still kind of hanging out right at support. And that can be said for GDXJ and also SILJ. We're kind of just drifting sideways. I don't think gold is strong enough yet. Gold and silver, they haven't broken anything yet, I should say. They've broken out and they're relaxing right now. People are not interested. The sentiment isn't there yet. This is generally when I start to accumulate and buy heavily, is when no one's looking. Things are very cheap in these. We saw that in the XAU to gold ratio, and now we're waiting for the move. That's where I put my last ditch little stash that I have of cash back into, not back into, in addition to what's already in there before the move on up. Now, crude oil is looking excellent, guys. 2.6% up. And this is a break to the upside. This looks very, very strong for a move on higher. I am fully loaded in this, and I bought in this general tip down here. I bought a good chunk. Thanks for the negative sentiment. Thanks for people selling me their, your shares if you had sold. I bought a good chunk down there in the ETFs, in the individual companies. You can go and look. Energy service companies, I was all over the place in here. So crude oil looks really good. I think we're going to go higher. It doesn't mean that we go straight higher. It can be a grind, but it looks very good. Natural gas down 1.5%. I still think that this is working its way on up. We've got small down candlesticks. It doesn't look like it wants to completely just rip it to the downside. I actually think it looks good to potentially move on up with time. XOP, yeah, you know me, hitting it hard today, bullish engulfing, looks like it wants to go higher. Very strong. We've broken the downtrend. Everything looks good to move on up. OIH, ripping it. Absolutely ripping it. This is a big old bullish engulfing. It's engulfing the candlesticks before it. Again, you might get a little bit of a bloody nose Monday or something, a profit-taking day on Monday. But it looks excellent to continue higher. Big picture view, guys, I could see this thing just absolutely ripping. We got a little bit of resistance where that blue line is left. That's what we've been hitting our head on, hitting our head on. If we get enough pressure and break out of this thing, we could release from that selling pressure, that resistance level. When it releases, we could see a big move. Now, I'm not saying I know with 100% certainty that the big move is 100% coming. What I'm saying is when it does release, we could see a very big move. It could be rapid. The Sprott Physical Uranium Trust, we are still squeezing up. We were slightly, just sideways today. You're probably going to see some trampoline jumps, is what I like to call it, consolidation. And then we're going to start and try to hit that 1815 level again. We're going to keep hitting it. What we've done is we hit it here. We come back. We measure the move coming back, right? It came to here. We hit up, hit it again. We came back to here. We came up and hit it again. Came back to here. You can notice that each time the sellers are less forceful at hitting this thing up. We hit it again here. We're probably going to end somewhere in this general vicinity of where we're at. What I would do, if it were me, is I would buy down here, buy down here, buy down here, and guess what? I would buy down right where we're at. I would load up and then wait if you are bullish on uranium. URNM also looking strong. We've broken this downtrend line. Step one is to break. We got our high here, right? So we coming on back. We're going to probably get a low right where we're at. What would I do here? What do I do, guys? I buy the back test. Oops. Buy the back test. I buy it right where we're at. That's where I would do it. URNJ also right where I think is a good spot. That's where I would be looking. And a lot of individual companies with a lot of leverage to the move to the upside are at, I think, ideal buy points. So there's a lot of that. And again, if you want to know those companies that I'm doing and what I'm looking at, you have to look at the website. TAN came on back. This thing is surprising how much selling pressure is still in this thing. Again, I think solar looks good from a longer term perspective that we're going to probably move on up. I don't like solar. I don't like renewables. I don't think that it's all funded by government. So who knows when that money is going to be deployed there, how it's all going to look. I think a lot of people are very confused. They need to come out of the renewables closet, so to speak. And the reason I say that is they think that the generation of solar is incredibly cheap. They say, oh, okay, it's so cheap, but it's like, yes, it's cheap when it generates power. The problem is it doesn't generate power often. So when you sink all this money into it, you sink all these things into it, it doesn't generate enough power to offset the downtime that it has. So it'd be like, hey, look, I bought a car, but I can only use the car 10% of the time. And people say, well, that's stupid. Exactly. That's exactly what I'm saying. Solar is stupid because you can only use it 10% of the time. You've got night. That's all basically taken away. And you've got these gigantic surges of energy when the sun comes out. And it's going to amplify that problem if they put more and more solar on the grid. Plus, these guys don't make much money. A lot of them. They do not make a lot of money. COPX up 2.28%. We're still moving in this channel here, and it is undecided on where it wants to go. Lithium. Now, lithium's looking quite strong. We've got the falling wedge that I've got here. It is a massive pattern, and we've broken to the upside. So what would I do, guys? We've got a break. There's your retest. That's where I would have purchased. And what do we got now? We're starting to move higher. We're still in a pretty good location for a lot of the different companies. REMX is in the same location. We've got a falling wedge here, and I drew it off the closing prices of a lot of the majority. Yes, there's a couple of that are a little bit higher here, but I like it right where it's at. I think it looks good. The S&P down a little bit. It's still a pretty small down day. It's almost like someone's holding this thing up. And then you've got the NASDAQ that's also down a little bit today, down 0.13%. And we've got the yield curves kind of partially up, partially down today. It did uninvert. I think that eventually this is going to roll over depending on where interest rates go, but it will eventually roll over. I'm not saying short term. I'm saying we could go up to even a double top. That is possible. I'm not saying it's going to happen immediately, but I think eventually it's going to roll over, and I think commodities are just going to rip it. And I think the NASDAQ could even peter out at some point and start to head lower. I just don't know where that necessary point is. The tailwinds aren't for the S&P and the NASDAQ. So I don't go where you're running against a strong headwind, a stiff headwind. You don't want to run against that. You're not going to set any records. You're going to set records where you've got all the tailwinds, hurricane force tailwinds behind commodities. That's where I'm going to be looking. Emerging markets looking a lot better with that weaker dollar. I do think this is going to work its way higher. I would be looking at a lot of emerging market stuff. XHB, home builders, basically holding strong today, up 0.36%. I do think this is going to work its way on up. We could see a very big move in the whole building stocks depending on where interest rates go. Moo working its way on up. This is a lot of the fertilizers. I think this is going to work its way on higher. I think it looks fantastic. And we've got the big move up. We've got our pullback. Here's our pullback. That's kind of our retest move. Now, could this go all the way back down? It is still possible. I'm not ruling it out with 100% certainty, but it does look like people are accumulating here. So that's what I'm going to do. Copper up about 1%. This looks good to go higher. It looks like we are changing that characteristic. Small selling pressure down days. We've got a nice, good up day today. Let's hope that momentum can continue, and hopefully we can get above that resistance area. Iron ore up a little bit. Again, I think we are going to work our way on up over time, over the longer term. So falling wedge, broken, all that looks good. Nickel up 3.39% today. It's holding on right at that resistance line. We'll see what happens. We'll see if we can go sideways here or something. Aluminum up a little bit, 0.53%, and we're right below kind of that support level. We're right at that support level. We'll see if we can hold. Baltic Dry Index moving sideways. I do think it's going to work its way on up. Just be patient. Newcastle Coal doing its trampoline jumps all over the place here. It's got a base out before moving higher. This could be a spot to start looking and accumulating, is maybe perhaps coal companies if you like coal, but it might take a little bit of time. I know a lot of the fertilizers are also in the same situation as coal. We've got urea and ammonium nitrate, some of those. It's kind of just slowly coming back, doing a retest just like coal is. Ethereum heading a little bit higher. Again, I think this is going to go on up. We're just squeezing up right now. And then Bitcoin is also already popped higher. The flag pattern, I think it will work its way on higher. So just be patient. That's what we've got for today, guys. That's what I see in the markets. I would say undoubtedly oil looks really good. Energy looks really good. Energy services, oil by breaking to the upside there. I think it looks very, very strong. It could be go time here, guys. We are breaking a lot of patterns, falling wedges to the upside. That includes rare earth metals. It includes lithium. It includes now oil. A lot of the oil stocks, energy service companies, a lot of the natural gas companies, fertilizers are looking like they're ready to break out. We've got emerging markets, companies in the tech sector that are emerging markets that look very good and look like they're bottoming out. To me, this could be soon the bottom of wave 2 coming into wave 3. Maybe we're already in it. That's the problem, is you don't know when exactly it's going to bottom and turn. The way that it looks like to me is that we are already turning. That the bottom's done. We're starting to come on up, and that wave 3 is beginning. That's what it looks like to me. Now, it doesn't mean that everything in the entire sector has bottomed and is moving higher. What you want to do is you want to look for lagging sectors. Lagging sectors. We can find lagging companies in lagging sectors that are still way down. I'm not saying that we've had big, huge impulse moves on up, but some companies have moved up dramatically off their bottoms. Even today, I've seen 15% up move days in a single day, which if you add it up from its bottom, it could be 30, 40, 50% from the bottom of where it's at. And catching the ultimate bottom, that's really tough, but that's a pretty big move off of a low point over the past month or two. So I think things look pretty good. I think gold looks good. I think silver is firming up. So could this be the everything type rally where everything rallies together? It could be. It could be where even the S&P and NASDAQ rally with it. So I'm in there. I think there's some pretty good buy points on some of these companies, and I've deployed money. I'm going to be riding it. So that's what I've got for today, guys. Give me a thumb up for the content. Subscribe to the channel. Subscribe to the website if you guys are interested. Bring your questions for Sunday at 7 a.m. I'll see you guys there if you're a Platinum member. And that's all I've got for today. So we'll catch you later. This is Finding Value.